This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil gained 2.5% on Friday after a U.S. official told Reuters that an immediate Saudi oil output boost was not expected, and as investors question whether OPEC has the room to significantly ramp up crude production. The comment during U.S. President Joe Biden's Middle East visit comes at a time when spare capacity at members of the Organization of the Petroleum Exporting Countries, OPEC, is running low. Part of the support is that everybody and their brother who digs down into the Saudi situation see that they don't have a lot of capacity left, said John Kilduff, partner at Again Capital LLC in New York.
The European Union could ban the import and transit of some fuel oil from Russia around 6 months ahead of the planned deadline, an EU official and 4 traders told Reuters. The EU has been reducing imports of Russian oil products since March, after Moscow sent thousands of troops into Ukraine, and agreed a full ban from February 2023. However, the import and transit of Russian coal is being stopped sooner, from August 10, and technically may include fuel oil. EU bans are based on so-called combined nomenclature, CN, codes used by customs. One of the codes being used for the coal ban is 2707, which also refers to oils and other products of the distillation of high-temperature coal tar, similar products in which the weight of the aromatic constituents exceeds that of the non-aromatic constituents.
Moving on to the top news in the energy sector.
Saudi Arabia, the world's largest oil exporter, more than doubled the amount of Russian fuel oil it imported in the second quarter to feed power stations to meet summer cooling demand and free up the kingdom's own crude for export, data showed and traders said. Russia has been selling fuel at discounted prices after international sanctions over its invasion of Ukraine left it with fewer buyers. Moscow calls the war in Ukraine a special military operation. The increased sales of fuel oil, used in power generation, to Saudi Arabia show the challenge that U.S. President Joe Biden faces as his administration seeks to isolate Russia and cut its energy export revenues.
Asian spot liquefied natural gas, LNG, prices remained at high levels this week on a summer demand pickup in Asia and uncertainty over the Nord Stream 1 pipeline's return to operations after maintenance ends on July 21. The average LNG price for August delivery into Northeast Asia LNG was estimated at $40.50 per million British thermal units, MMBTU, down 50 cents or 1.2%, from the previous week, industry sources said. The average price for September delivery was estimated at $41 per MMBTU, a 4-month high and close to record level seen in December at $44.35 per MMBTU. Next, we have the top news in metal markets. China's crude steel output fell 3.3% in June compared with a year earlier, according to data from the Statistics Bureau, as bad weather in recent weeks hit construction activity. The world's biggest steel producer churned out 90.73 million tons of the metal last month, according to data from the National Bureau of Statistics, NBS, on Friday. That was down 6% from 96.61 million tons in May. Average daily output in June was 3.02 million tons, according to a Reuters analysis of the NBS data. That compares with 3.12 million tons of daily production in May.
Copper prices rebounded on Friday after touching 20-month lows after U.S. data eased worries about high inflation and pushed the dollar lower. The 3-month copper contract on the London Metal Exchange had gained 0.2% to $7,186.50 a ton by 1600 GMT. It had earlier dropped as much as 3% to $6,955 a ton, slipping below the $7,000 mark for the first time since November 2020. Copper prices had been hit gloomy economic data from China and worries that aggressive rate hikes to control inflation may trigger a global recession.
We will now look at the top news in the agricultural sector.
Indonesia plans to soon bring in new rules on its palm oil export levy and incentives to increase exports and empty storage tanks, a senior official said, the latest effort to accelerate shipments after a ban ended in May. The government is still weighing up the rate of the new levy and incentives, to be applied temporarily to address a crisis of ballooning inventory, Deputy Finance Minister, Swahasul Nazara, told Reuters, adding he expected the new regulations this weekend or by early next week. This temporary incentive is meant so that exports can flow, so that tanks can be quickly emptied and farmers' fresh fruit bunches can be absorbed, he said in a text message.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.